opening. We have Mahesh Patil, Co-Chief Investment Officer at Aditya Birla Sun Life AMC, now joining us. Mahesh, hi, good morning. Thanks for joining us. So the market leadership is intact, right? Private banks and consumption. Do you think that's still going to be the way to approach things?
Yeah, I think wherever there has been steady earnings growth and visibility, I think those sectors and companies will continue to hold on, I guess. I think unless we see bottoming out of the economy, okay, which we think should happen in this quarter, I think you should see things bottoming out, and then other sectors start to look better, more the cyclicals. I think then you will see next year probably the lead for the market could come in from the cyclical sectors, but still at the moment we're still not seeing that upturn in the economy. But clearly the valuation dichotomy in the market which is there, and a lot of these cyclical sectors where the valuations are now significantly below the long-term averages, I think when we see signs of revival, I think there could be leadership coming in these sectors down the line. So it's while the sectors which are performing, which is the private banks, even the corporate banks which have started to participate now, our consumption will be steady performers, but the delta returns could come in some of the other sectors, okay, which could turn around as we move forward in the next fiscal year.
Okay, well, for now the market is picking up a little bit of pace. So 12,084 is what we're seeing on the Nifty. The Bank Nifty is up about 75 odd points, and autos are really making a comeback. Maruti, Eicher, Tata Motors, all up about 0.5 to 1.5%. Mahesh, hi, good morning. Do you think that there's still more to go for autos? I mean, Maruti is back at 7,200. Eicher is back above 21,000. How are you approaching this space?
So the auto sector still, I mean, there are three parts to it. One is the four-wheelers, the two-wheelers, and the commercial vehicles. We think that the early turnaround will happen in the four-wheelers, because there the transition into the BS6, a lot of the companies like Maruti have already prepared, and they already got the products in the marketplace. Again, in this space, the inventory levels are also very low. So as the retail sales pick up, and we've seen that pick up in the last 1 month or so, I think we should see greater earlier getting translated into wholesale sales. So you should see a early recovery in the four-wheeler space. Two-wheelers, I think, would see slightly higher percentage price increases because of BS6. So we'll have to wait and see how that really impacts, okay, in the next fiscal year in terms of volume growth. But again, there also, I think things should bottom out this year. In commercial vehicles, though, I think we should take slightly longer period in terms of recovery, because the overall economic growth is still low. There's still enough capacity which is there in the system, and the cost increase because of BS6 is substantially higher. So I think there the turnaround could take at least another 9 months or so.
Okay. Morning, Mahesh. Thank you so much for dropping in. Well, I wanted to ask you about the industry itself. November was a shocking number for us. I mean, we were not quite prepared for that equity flow being so low. Is December better?
Again, December is still early days, okay, so because
half the month is over, yaar.
No, so December also is more or less similar, I would say, slightly better, I would say. At least the initial numbers are showing slightly better. Again, it's a question about, I think the SIP numbers have been fairly steady. It was more the redemptions, okay, which made the difference, and I think that pace is clearly slowing down in this month.
Okay. Sorry, go ahead. No, now you have it. Very sorry, Anuj, go ahead.
No, I was just looking at the PSU equity fund that you are launching, or you launched already. Why, this fund at this price? Because we've already seen a big rally play out in PSUs. Do you think it's still a good time? Because, you have to be really stock specific in this.
Sure. Yeah, actually, if you look at the PSU whole basket, right, across the board has actually underperformed significantly in the last 1 year. And because of the fear about supply of paper from the government, so now these stocks are quoting, in fact, and these are large names, they are leaders in their space, they are quoting at either price to book value or P multiple, which are at 10-year lows. Right, so clearly I think valuation perspective, I think this is the best time. There's a huge margin of safety because of the valuation comfort, and many of the PSUs are core to the economy, right? If you look at whether it's oil and gas sector, the metal space, the utility sector, and where I think as the economic growth, we're seeing probably bottoming out. As that grows, I think they'll participate with the overall economic growth, and these are companies, most of the companies are generating good cash flows, right? So, and with the government wanting more money to bridge the fiscal deficit, I think you will see increased payout of dividend from these companies. Already there's a policy to pay minimum 30% payout, but companies would probably pay more than that. So the dividend yield in some of these companies is as high as 5% to 8% in that range, right?
Okay.
So where you have bond yields are at around 6.5%, if company is giving a dividend yield of more than that and with some growth in line with the broader economy, I think it makes a good case for somebody to look at this point in time.
Okay.
With good margin of safety with steady returns. I mean, we don't expect spectacular growth in this sector, but I think the risk reward clearly looks favorable.
Okay, well, PSUs historically have not generated great returns for investors,
Sure.
so that's why there's been a bit of skepticism to invest in this space.
Ramesh
But,
Damani will disagree.
So actually, the value unlocking because of the strategic, the government is now actually warming up to that
Yes,
idea, and we've
yes,
seen that,
absolutely.
right? So that automatically changes the whole narrative in terms of the multiples for the whole sector,
For
which we think
PSUs.
could play out in the next few months.
Okay, well, for now, I just want to point out that a lot of these paper stocks are rallying and rallying hard. So Orient Paper, JK Paper, all up, Star Paper up about 5 to even 17% on some of them. Our sister channel has put out some news saying that in the budget, a lot of the eco-friendly products like paper, jute, pulp, etc., the industries will get some incentives. So let's see how that shapes up. But for now, these are stocks that are rallying there. I wanted your thoughts just for earnings in general, Mahesh. We are entering into the next quarter. Come Jan, we'll get numbers from IT, etc. How are you positioned in terms of earnings? What kind of earnings growth are you penciling for the full year? And in terms of sectors, where do you see the maximum recovery come through next quarter?
Sure. So I think for this quarter, again, it would still be a slow kind of a growth. Okay, we're not seeing any major recovery. So I don't see any major change in trend compared to what we saw in the second quarter. But I think if you look at slightly forward looking, right, next year. So this year, I think the overall earnings growth would be around 13-14% is what we are looking at. I think consensus would also be around that number. If you remove the corporate banks, right, then the growth falls down to around 3-4% or so. So clearly this year is a difficult year. But I think next year, again, the earnings growth consensus looks at around 24%. We are at around 23%, 22%. The bulk of the growth would be driven by, again, the financials, okay, driven by not only the private banks, but corporate banks will continue to show better growth because credit costs will come down. Apart from that, other sectors which were depressed this year, like auto sector, for example, even the telecom sector should see a good growth in FY21. And also other sectors like pharma, where we are seeing a reasonable growth, say in the high teens. So I think in the next year, I think the growth rate would be more because of the low base of this year, which would drive a few sector where the growth numbers could be stronger. Overall, I think I think the turnaround in earnings, one has to see how this quarter picks up and how we pick up in the fourth quarter, because I think that will be key really. The budget, how the monsoon, the rural economy picks up post the Rabi season, and the rate cut transmission, how it happens. I think those will be key to really drive not only the economy but the corporate earnings growth in FY21.
Will you keep your earnings growth forecast even if the rate cut transmission doesn't happen? Because that is the leg that is not working. It is a broken monetary policy system. I mean, 6.8,
Right,
10 year.
right.
So without that also you think the earnings can be delivered?
Yeah, I think so, because again, if the rate transmission happens, probably you could see some of the other cyclical sectors do much better. But some of the sectors which we are talking about, again, the earnings growth in Nifty is driven by some of the large companies. Okay, for it doesn't really matter because interest component cost is not a large component of the total earnings. So I don't think it will. Only thing is that the recovery in the economy, what you're expecting, probably will be slightly more elongated. That's the only difference.
Okay, I want to ask about IT actually. That's the best performer this month. So is that will it command an outsized portion of your incremental funds?
So IT, again, it's more of a defensive. There is not too much change or volatility in the earnings what we are looking at. We're not seeing any major tailwind in the IT sector from the rupee side. So rupee remains, our view on rupee is that it will remain pretty range bound, probably 2-3% depreciation next year. US, while there are some signs of recovery and growth in the US market, but I don't think it will change overall volume outlook for the IT companies. So they'll continue to grow at around 7-8% in terms of volume, which is a decent growth, nothing spectacular. So again, it's IT overweight, underweight call is relative, right? In absolute terms, they might give you around in line with the earnings growth 8-10% returns. But relatively, how the economy does is where one will decide.
That is exactly what I'm asking you. Are you going to be defensive or are you going to be pro-cyclical?
We are not overweight on the IT sector at this point in time. We think that.
So you're not defensive, you're pro-cyclical.
Yeah.
at the moment.
Right.
Okay, but since you are looking at the way the economy recovers, would it be fair to assume that the metal stocks could play for a bit of a further recovery, because as industrials pick up, as autos pick up, the immediate demand will come through for metal companies. So do you like the names like Tata Steel, JSPL, etc.?
So metals, again, interestingly, because of the global risk on and the money supply increase, there is expectation that the global growth, especially in US, Europe and even in China, could be slightly better. So the PMI numbers are showing some signs of improvement.
Yes.
If that plays out, I think you could see metal stocks, again, they have been beaten down, they have underperformed over the last 1 year. Valuations are reasonable. So there could be some trade, but we don't see metals as a sector would be a good long-term growth driver, because global growth, while it will pick up from these levels, still be sluggish. And there's enough capacity in China which could come up. So it can be a trade at best from a short-term perspective, but we don't see as a long-term investment in the metal sector would do well.
Okay. Yes, today, of course, the US PMI numbers coming good,
Yeah.
and the risk on in Asia is certainly helping, and that's certainly helping the Indian indices as well. The first dip has been bought.
Oh yes, and just look at Bharti Airtel, by the way. That stock is seeing, from the low point, a significant recovery. There it is. So respecting 420 thereabout, moving into the green. Mahesh, on telecom, of course, there are not too many listed players, but Bharti's been one of the stocks of the year. Its ownership has been very narrow. Are you adding any telecom stocks now in your portfolio?
So we've added telecom in the last few months. Again, as we've seen, again, everybody has been waiting when this tariff increase will happen, because we've seen sustained pressure on tariff in the last couple of years. So clearly that has bottomed out, and we are now a phase where we are seeing tariff increases, and that will drive earnings growth. So given that, and again, the consolidation industry is pretty much done to a large extent, right? So I think from that perspective, I think the sector could see earnings upgrades down the line. The valuations have caught up. I'm not saying the stocks are exactly cheap, but I think directionally, as we see usage go up, as some more room for tariff increases, I think you should see steady outperformance in this sector. I mean, there is some amount of supply of paper also which is likely to hit in this sector. I think that would probably lead to more ownership in this sector down the line.
Okay. Mahesh Patil, it's always a pleasure having you with us. Thank you very much indeed for joining us. I hope we will speak before the new year. If we don't, here's wishing you a great 2020.
Yeah, Happy New Year.
Okay, well, we shouldn't be saying perhaps about 2020 this early, but we have only 2 weeks. Well, let's shift focus now to the bond market.